Okay, well, let's have a look then at each of the projects and the investments in detail. So starting with Goldridge then, can you take us through the Goldridge project and opportunity?
Yes, look, Goldridge is an acquisition that was made about not even, I think about 18 months ago, maybe a bit less. We acquired the asset for shares and cash equivalent to 700,000 US dollars. And the reason we bought the asset was that we were aware of the fact that there were three previously producing mines, and we were aware of the fact that there were substantial opportunities with waste left behind by previous operators that we could actually turn into revenue. And that was the path we set ourselves down. And we looked very carefully at the waste dumps. We looked very carefully at the pillars that are underground. And we announced results, and some of those results in terms of gold context were extremely interesting and extremely positive. There was a lot of excitement about that. We then started looking at how to exploit that opportunity. And one of the things that we did is we completed a competent persons report by the consultants SRK. And they said, hang on a minute, there's a bigger picture here. And Christian was also pushing quite hard because he was also telling us that no one has looked at the geological structures that connect these three previously producing mines. And that means that there are, between these mines that we have large areas of unexplored territory. When SRK came back to us, they said, look, there's a possibility here that there are a number of vein systems that would offer open pitable opportunities to generate more revenue than if you go after the waste dump. More importantly, if you go after the waste dumps first and then go after the open pitable opportunities, you might actually snooker yourself because you won't be able to go after certain pillars and you won't be able to go after certain waste dumps because you've taken a different approach. So therefore, they've suggested take a step back, look at the bigger picture, and establish the geological structures and the connectivity in terms of opportunity that lies between these mines, and determine whether or not the assumption of an open pitable opportunity is a valid assumption. That has meant that we've had to go back to market and say, look, gentlemen, there's a much bigger opportunity here. If we go after the small opportunity, we lose the opportunity, which is much larger. The small opportunity would be quite rapid. The large opportunity is going to take a little bit more time because it needs a bit more work. And we're currently undergoing that work. Bear in mind that these previously producing mines also have reams of information. And due to the previous ownership that was fragmented, in other words, a number of companies owned these licenses before us, the information that is available is extremely substantial and significant, but it is all over the place. So we're pulling all of that together and creating a proper data room, developing a new presentation based on this larger picture that we're looking at, and going out at the same time to confirm that those assumptions are actually valid. And that's work in progress. And that work is now well ahead in terms of execution. However, you also have to bear in mind that Arizona, you've got temperatures of 50, 55 degrees. So on-field work is a little bit difficult. Mm-hmm. But by November, we will have the fuller picture. And we'll have a very clear path or pathway to develop the asset and to create value. Additionally, within the geography that we're operating and within 10 miles of it, there are a number of additional previously producing gold mines. And there is a possibility of consolidating the area that we're looking at.
Okay.
So again, that would give us an opportunity to build up that whole special purpose vehicle. But you don't want to start making acquisitions until you have confirmation that bigger picture is available to you. So again, it's putting the puzzle together. And I think investors are a little frustrated because they're saying, well, hang on, Rolf, you said that there's an opportunity and it's going to be quite immediate. That opportunity is there. It is not going away. The question is, how do we make sure that we extrapolate the most value for our shareholders? The implication of it is it's going to take us a little bit longer.
So are you putting a time, like a dead stop date on when to make a decision then, whether to go for the more near-term waste dump opportunity or look at potentially an open pit mine?
By November, we'll have a very good view on that, and we'll have a pathway to value and how we take it forward.
Okay.
And that is going to be that will then be the pathway that we announce and that we pursue.
Okay. And who's working on this at the moment, Rolf? Have you got a board in place for Goldridge or not?
Goldridge, we've got, basically we own 100% of it. There's a company out of Canada that we own that owns the asset. We've got our legal advisors working on it. We've got Bart, who runs, from a geological perspective, the asset. And he's key. He was the consultant working at SRK. He's working with us, and he's the one driving forward the whole development program of the asset. Based on the findings that we're going to have by end November, we will then start looking at the pathway, and based on the pathway that we pursue value with, we'll then start building the structure around that. But for the time being, we're using contractors that Bart is bringing in, and we're bringing in on specific elements of work to be completed, and Bart is orchestrating all of it. The other positive aspect on this is that Bart is prepared, because he's excited about the project, to take half of his fees in shares, because he sees that there is potentially substantial upside in this opportunity.